Are you looking for ways to maximize your 401 contributions? If so, you're in the right place. In this video, we'll cover everything you need to know about maximizing your 401 contributions. First, let's start with the basics. A 401k is a retirement savings plan that is offered by many employers. It allows you to save money for retirement on a tax-deferred basis, which means you won't pay taxes on the money you contribute until you withdraw it in retirement. The key to maximizing your 401 contributions is to contribute as much as you can afford to each year. The more you contribute, the more you'll have saved for retirement. But how much should you contribute? Well, that depends on a few factors, such as your age, income, and retirement goals. In general, financial experts recommend contributing at least 10% to 15% of your income to your 401k each year. Now, let's talk about some strategies for maximizing your 401 contributions. One strategy is to take advantage of your employer's matching contributions. Many employers offer a matching contribution, which means they will match a certain percentage of your contributions up to a certain amount. For example, your employer may match 50% of your contributions up to 6% of your salary. If you're not taking advantage of this benefit, you're leaving free money on the table. Another strategy is to increase your contributions over time. If you can't afford to contribute the maximum amount right away, start with a smaller amount and gradually increase it each year. This will help you get closer to your retirement goals without putting too much strain on your budget. In the next segment, we'll talk about some other ways to maximize your 401 contributions, including catch-up contributions and Roth 401 contributions. If you're over the age of 50, you're eligible to make catch-up contributions to your 401. Catch-up contributions allow you to contribute an additional amount to your 401k above the regular contribution limit. For 2021, the regular contribution limit is $19,500, but if you're over 50, you can contribute an additional $6,500 for a total of $26,000. Catch-up contributions can be a great way to boost your retirement savings if you're behind on your goals. Just remember that catch-up contributions must be made by the end of the calendar year, so plan accordingly. Another way to maximize your 401 contributions is to consider Roth 401k. A Roth 401k is similar to a traditional 401k, but with one key difference: you contribute after-tax dollars instead of pre-tax dollars. This means you won't get a tax deduction for your contributions, but your withdrawals in retirement will be tax-free. A Roth 401k can be a good option if you expect to be in a higher tax bracket in retirement than you are now. It can also be a good option if you want to diversify your tax exposure in retirement. Just like with a traditional 401k, your employer may offer a matching contribution for your Roth 401 contributions. Make sure to take advantage of this benefit if it's available to you. In the next segment, we'll talk about some other factors to consider when maximizing your 401 contributions, such as investment options and fees. When it comes to maximizing your 401 contributions, it's important to consider the investment options and fees associated with your plan. Most 401 plans offer a variety of investment options, such as mutual funds, target date funds, and individual stocks. It's important to choose investments that align with your risk tolerance and retirement goals. One strategy for maximizing your 401 contributions is to choose low-cost investments. Fees can eat into your returns over time, so it's important to choose investments with low expense ratios and avoid unnecessary fees, such as administrative fees or sales charges. Another factor to consider is the asset allocation of your investments. Asset allocation refers to the mix of stocks, bonds, and other investments in your portfolio. A well-diversified portfolio can help you manage risk and maximize returns over time. If you're not sure which investments to choose, consider seeking the advice of a financial advisor. They can help you create a personalized investment strategy that aligns with your goals and risk tolerance. Finally, it's important to regularly review and adjust your investments as needed. Your goals and risk tolerance may change over time, so it's important to make sure your investments are still aligned with your needs. In the next segment, we'll talk about some other ways to maximize your 401 contributions, such as consolidating old 401k accounts and taking advantage of tax credits. If you've changed jobs throughout your career, you may have multiple 401k accounts from previous employers. Consolidating these accounts into your current 401 can help you maximize your contributions and simplify your retirement savings. Consolidating your old 401k accounts can also help you avoid unnecessary fees and ensure that your investments are aligned with your current goals and risk tolerance. To consolidate your old 401k accounts, contact your previous employer's plan administrators and request a rollover. You can then roll over the funds into your current 401k account or into an individual retirement account IRA. Another way to maximize your 401 contributions is to take advantage of tax credits. The Savers Credit is a tax credit that is available to low and moderate income individuals who contribute to a retirement account, such as a 401. The credit can be worth up to $1,000 for individuals and up to $2,000 for married couples filing jointly. To qualify for the Savers Credit, you must meet certain income requirements and contribute to a qualifying retirement account. The credit is based on a percentage of your contributions, with a maximum credit of 50% of your contributions. In addition to the Savers Credit, there are other tax benefits associated with contributing to 401k, such as tax-deferred growth and potential tax savings in retirement. In the final segment, we'll recap some of the key strategies for maximizing your 401k contributions and preparing for a comfortable retirement. To recap, maximizing your 401k contributions is an important step in preparing for a comfortable retirement. Here are some key strategies to keep in mind. Contribute as much as you can afford, aiming for at least 10% to 15% of your income. Take advantage of your employer's matching contributions. Consider catch-up contributions if you're over 50. Consider Roth 401k if it aligns with your retirement goals. Choose low-cost, well-diversified investments that align with your risk tolerance and goals. Consolidate old 401k accounts to simplify your retirement savings. Take advantage of tax credits and other tax benefits associated with contributing to a 401k. By following these strategies, you can maximize your 401k contributions and set yourself up for a comfortable retirement. Remember, it's never too early or too late to start saving for retirement. The earlier you start, the more time your money has to grow. But even if you're starting later in life, there are still steps you can take to catch up and prepare for a comfortable retirement. Thank you for watching this video on maximizing your 401k contributions. We hope you found it helpful and informative. If you have any questions or would like to learn more, please consult with a financial advisor or your employer's plan administrator.